Market news now. Shares in Asia rose as investors continued monitoring the intensifying crisis surrounding Ukraine. Mainland Chinese stocks closed higher. Hong Kong's Hang Seng Index advanced about 0.6% in its final hour of trading. Meanwhile, analysts say the outlook for the Federal Reserve rate hikes after March may become less clear if Russia continues its incursion into Ukraine. Well, we will continue monitoring that, but to unpack what has been happening, also dissect some of the local company news, we are joined by our market analyst Chantal Marks from F&B Wealth and Investment. Chantal, thank you so much for your time this afternoon. I mean, even though markets breathed a sigh of relief that the sanctions imposed on Russia were not as aggressive as we would have expected, our local markets, for some reason, the resources are lower. What's driving that?
So I think a combination of a stronger rand and perhaps slight risk-off sentiment still kind of prevailing, having an impact there. And then the biggest impact, I think, and I had to double check this today, BHP, which is a heavyweight and has the heaviest weight among the resources complex, down 4.5% today. It's trading ex-dividend, which means that if you're buying the share now, you're not going to get a big fat chunky dividend in a couple of weeks' time. Whereas if you bought it yesterday, you would have received that dividend, and that explains why you see that big drop in BHP in particular.
Right. So we also had local companies release their results. And I know locally we're focusing on the budget that's about to take place in the next, say, 40 minutes or so. But which company news caught your attention?
It's been absolute chaos on SENS, and I guess that's the way it works. When we're all trying to focus on one thing, there's a lot of other things that are distracting us. But the standout is Wilson Bailey Homes, down at one point in excess of 20%. This company released a trading statement for the year ended 31 December, but the big news was that it's decided to withdraw funding from its Australian operations. Now, the Australian business was up for sale. Everything was kind of set in stone for them to dispose of this business towards the end of last year before it was blocked by Australian authorities. But the business has been a headache for them for quite some time. They used to do very large, complicated civil projects in Australia, but that market is exceptionally competitive, which means that margins are so tiny that if you make even one mistake, the project or the contract becomes loss-making. So this has been an issue for Wilson Bailey Homes for quite some time. And of course, if they are going to withdraw from that market, they're not going to benefit from potential upside or potential recovery there. And they've already committed 2 billion rand odd to that business, so the market not liking that update at all.
Let's reflect back on the impact the Russia-Ukraine tensions had, at least over the past 48 hours or so. What's the biggest risk here?
So I think the biggest risk is that you do end up in a full-scale war situation, and that there has to be intervention from NATO's side, specifically the United States. We don't really want to see, I don't think anyone really wants to see a large-scale war break out, particularly in the wake of what has already been a very challenging time from a global economy perspective in the wake of COVID-19. Should that scenario play out, you will see broad-based weakness across risk assets including equity markets, emerging markets in particular, and even to some extent fixed income markets. So that would be that would include emerging market bonds as well.
In the case of heightened tensions, it gets worse from here. Does it impact the Fed's path?
So that's quite a complicated question with a very complicated answer, because what would happen if things escalated from here is that you could see a situation where supply chain bottlenecks worsen globally. You could see a situation where oil prices continue to rise. In that case, inflation could become a little bit of an issue, but there will be a macroeconomic fallout as well. You're likely to start seeing growth slowing down quite a bit, particularly particularly in the areas surrounding the conflict. And that could have a knock-on impact on global growth overall. In that case, it's going to be very complicated. Does the Fed actually hike rates while there's a full-scale war ongoing, even though inflation is spiraling a little bit? Or do they try and look through this conflict and keep to what we're now expecting to be a steady upward path in terms of interest rate hikes?
So as I mentioned, in the next half an hour, we have Finance Minister Enoch Godongwana delivering his budget speech. What will you be listening out for?
Oh goodness, I would want to know exactly what's happening with the really chunky windfall that we're getting from higher commodity prices. So but what I mean by that is that income for government is going to be a lot larger and a lot higher than it anticipated the same time last year, and even at the medium-term budget policy statement, which took place in November. This means that government has some change to work with relative to what they previously budgeted for. What we'd like to see is that is applied to the temporary relief programs that we're seeing right now, the 350 Rand, and better still that it's been going to be allocated to reducing government debt, which I think will have a longer-term positive impact on the fiscus. What is a risk, though, is that this money gets spent on stuff like SOE bailouts or higher government wages or certain programs that don't necessarily have the desired outcome or effect. In that case, it would be quite negative from our perspective.
All right, Chantal, let's leave it there. Thank you so much for your time. That is Chantal Marks, who is, of course, from F&B Wealth and Investment.